Hey traders, welcome to Charts and Coffee. I was just discussing coffee with our resident Sector Secrets Mastery tea drinker, the Lorna bot, and she's having to drink some coffee this morning. She's not very happy about it. A lot of you have been rooting for tea and trades in the morning. Charts and Coffee it is. Great to see everybody. Oh, all right. So we've been talking for the week about how the catalyst for potential trades was Jerome Powell. And it wasn't even Jerome, it was the FOMC meeting minutes. So imagine being a fly on the wall during the last meeting and you get to get an idea of what it is they were talking about and why, right? How dovish are they and so forth. And, they aren't super dovish yet. They're getting ready to be ready, right? That doesn't mean they're not going to cut. It just simply means they're not going to do it now. And this is something that has, frankly, been discounted pretty clearly since Jerome, we're on a first name basis, he and I, since he was on 60 Minutes a couple weekends ago. So no surprise, but it still created some volatility, which is all we needed, right? And so that allowed for entries like American Express. You might say, whoa, Rog, what? American Express, which by the way, my mastery folks, we're really, really close. We're knocking on the door of T1 when I see you all in the Sector Secrets Mastery. So we're going to take some profit, half of our contracts, probably shortly after the bell, but I'll be with you for that. Just prepare. Now you might say, Rog, what about tech? If you watch the Tuesday video, I talked about two main themes. One, let the FOMC be the catalyst for the entry. And two, I'm trading around tech, right? I am completely trading around tech. Now, I know everyone wants to know what's going on with NVIDIA. I don't care. I'm glad there's a lot of volatility. I'm happy for those of you that might have been long. It was unusual for NVIDIA to have basically a 10% pullback from highs in front of what has to be agreed upon, not only a beat in terms of expectations, Wall Street guidance, or company guidance, Wall Street expectations, but on the whisper numbers. This is a big number. And NVIDIA is pretty much right back to where it was before the sell-off, if not, a little bit higher. So actually a lot of bit higher, as you can see. NVIDIA reminds me to do two things. Number one, gosh, who here has been watching this show for even a week? Who knows? Rog, is this when you tell us that the market is in an uptrend and to buy the dip? Yes, you know me well. We are simpatico. My gosh, gang, please, please, please. The markets are strong. That means weakness is a sale and we buy it. That's it. Now, here's what I will tell you. At some point, not yet, at some point, we will have a pullback and it will be dramatic. And it's going to likely be what I like to call that one last trend trade. But if I've been trend trading for 2, 3, 4 months, I don't know when that pullback's going to come. But if I've been trend trading, buying the dip and rolling higher with the market for a couple of months, which we're coming up on now, or at the end of February, do you think at that point we've built in a cushion of profit? So when we do have finally that one last trend trade, right? I had that one last, I'll give you a great example. I had that one last trend trade in SMH, right? I was not expecting a 10% pullback at NVIDIA before earnings. And I was looking for NVIDIA to maybe go sideways, a little bit of profit taking maybe, and then take symbols like SMH, where NVIDIA is the number one weighted stock, higher. Guess what? That stopped out. You think I give a rip? No, because I've been buying the dip, even including that one last trend trade. And yet, people are going to talk to you about how the markets are getting ready to pull back, how they're toppy, everything else. Great. What do? Short into a high? Look, if you hate your money that much, I have plenty of great charities that you can write that check to. Because a lot of folks confuse Wall Street with a charity. And if you're trying to pick a top in this environment, it is costing you money. If you're listening to people who are telling you to pick a top in an uptrend, they are costing you money. Please, please, please don't do it. Okay. And that is where we are. All right. So Please, gang, line watcher. I'm going to be totally frank and I'm going to be totally fair. And I do mean this somewhat respectfully. Who cares? Do you think anybody knows where the top is? So if you've been watching this show for any period of time, do you see a blow off top developing? Nobody does. Look, that is a question of, Rod, can you see into the future? Right? Please, I know I've been a little bit more adamant about it this year because I think after last year, what was it? Last year was the FOMC doesn't know what they're doing. The markets are going to crash. The yield curves are inverted. The markets are going to crash. What's the story this time? Seasonals, right? Oh, right. The market. Please stop listening to that. Nobody knows where the top is. Nobody, right? All we can do is say, is the trend going higher? We'll buy the dip. At some point, we will have that one last buy the dip, right? But if we've been doing it during the course of the uptrend, that's just part of trading. I don't care where the top is. That's not even a trading style. Okay. That's called picking the top, which is, I think we should just call it what it is, picking your nose, right? So I don't know. And I do mean that sincerely. Nobody knows, right? But you know what's going to happen? And I know this. Everyone's going to keep asking somebody, right? Oh, where's the top? And someone's going to tell you, oh, this is what a top looks like. How many tops have we had this year? Please, gang, it's costing you money, right? So surf the overall uptrend. I know I've had too much caffeine today. All right. But by the way, if you go, Rog, that makes sense. That kind of makes, and I hope someone out there is saying, gosh, Rog, yeah, all that fear mongering last year cost me money, cost me opportunity. Same thing this year, gang. Same thing. We are, look at the S&P, by the way. Look at the S&P. That is flirting with another new high, right? That's not bearish. New high. I think Henry says it in our Simpler Central room. I forgot what he says, but I love it. Something like along the lines of new highs are not bearish or something like that, which is so true. And I love that. All right. So not there it is. Thank you, Lorna. There is nothing bearish about a chart at all-time highs. I love that. And it's perfectly said, courtesy our very own Mr. Henry Gamble. All right. So let's do it. Let's do this. What do we have in the Essentials room? Any questions? What is going on in there? I know. What is this world coming to? Says Nomo FOMO. The bot is drinking coffee. Hey, by the way, Nomo, I've got the Nomo FOMO Gojo here in the cup. All right. Thanks for showing us the SmartFlex charts on the sectors. Oh, gosh, yeah. My pleasure. We did a trade in American Express in the Sector Secrets Master yesterday. We put on a trade there. Thank you, FOMC meeting minutes. And we focused on American Express because it is one, as you can see, of a handful of charts: JP Morgan, Visa, MasterCard, Wells, Goldman, American Express. Shorting any of those means I hate my money. That's all it means. Buying them means I'm following a trend. It's really that. Ask yourself, really, maybe write a sticky note, stick it on your desk and say, do I hate my money? Now, Bank of America could be a little different. SPGI, Morgan has been in a downtrend, mostly red candles. If you're looking for a short in financials, there are a handful of possibilities. It's just not any of the green names, right? It's just not any of those green names. And those green names may pull back, right? Certainly. But chances are they're going to resume after the retrace, right? Let's take a look at XLK. This is where NVIDIA there's 3 spots NVIDIA is really going to impact heavily because of its weighting. Everyone knows the NASDAQ, XLK, and then, of course, SMH, right? So this is what I do after earnings, by the way. It's let the dust settle, right? Let the dust settle. And then at that point, once the dust settles, how long is that going to take? Well, if NVIDIA came out after the bell yesterday, today is the day I let the dust settle. Day trade it, that's fine. But as far as the next trade, whether that be in semiconductors, SMH stocks, or whether that be NVIDIA itself, I'm not against it, right? No way am I. But let's let the dust settle, and then we can start getting into that maybe tomorrow, right? At the very soonest. So I need one full session to trade, and then I can start looking for another opportunity. All right. So this is what SMH looks like, by the way. A lot to love here, but what don't we want to trade? No Intel, No Texas Instrument. I would say AMD is meh. Not a no in terms of a buy, and ADI is whatever, right? NVIDIA, Taiwan Semi, Qualcomm, AMAT, SMH itself. A lot of things can be traded through the option of the ETF. That's one of the things we like to do in the Sector Secrets Mastery. Play the sector. And if we know what the heavily weighted stocks are, and take a look. The heavily weighted stocks, the top 4 are all heading higher. What's a great way to get a better bang for your buck instead of buying options in 4 stocks? Buy the SMH, right? All right. So next up is, let me get back to our layout here. All right. Is there a buy setting up on pins? Well, let's see. So earnings kind of punched in the mouth. 34 and a half. 34 and a half looks interesting. I guess the question is, do we see that the follow through is still likely to the upside? I agree. I would definitely be on the long side of this. The next thing is, where would the support be where buyers feel comfortable stepping in? And right now it's showing to be about $34.50. So then the setup is the question. And so what I would typically do, what I tell my mastery folks, is wait for a minor low. And this is a nice retest candle from the 20th. 21st took out the high of the 20th. And when you have a situation, let me show you what the pattern looks like. So now you have this nice retest. Remember, this candle on the 13th set up the Darvis. And then this ends up, the 20th ends up being the retest. So 13th sets the Darvis up. The 20th is the retest. Once we take out the high of the 20th, that is basically the trigger. So about 35.20. So that's the way the pattern works. That's a minor low trigger. It triggered yesterday. All right. And that's one of my favorite price patterns. I don't use chart patterns, but I do love price patterns. They're far more objective. So rather than looking for shapes, like, looking at shapes in the clouds, rather than looking at shapes, I'm looking at open, high, low, close to react a certain way. All right. Next up is, let's see. Is my trend label the 200? No. IWM keeps underperforming. That's relatively speaking. Sure, right. Underperformance is a relative term, and I agree. But it makes sense when you think of why, right? In fairness to the RTY, the Russell 2000, unlike its Russell 1000 cousin, is not full of tech. The Russell 1000 looks like the NASDAQ, right? The Russell 2000, which is the IWM, the RTY, is weighted with regional banks. And when you take a look at KRE is not all sorts of tall and awesome like its big brother, the XLF, the big banks. So when you see KRE languishing, and it is, right, relative to big banks, relative to other strong sectors, the IWM cannot participate, right? But can we put to bed, please? For the life of me, I don't know why people don't look at data and just say, can we just put to bed here? Russell doesn't lead anything, right? The S&P is near all-time highs. The NASDAQ's hit it how many times this year? And the Russell's languishing. Why? Because the Russell is weighted in a completely different way. I don't know where that started. And I guess some people just like to say it again and again, hoping that one day it'll be true. It just ain't. So let's remember, in fairness to the Russell, it's still having to deal with the laggy nature of regional banks. And that's what it is. And regional banks are not going to love the fact that rate cuts are coming later. XLF doesn't seem to care at all, does it? So you think about, do big banks care that cuts aren't quite here yet? Not even a little bit, but regional banks do. Yeah. And that's probably a big why. All right. So there is that. And what else do we have here? We're still discussing Lorna drinking coffee. I know, right? In the essentials room. I mean, my gosh, Lorna's drinking coffee. What is this world coming to? All right, CRWD. Big move lower in a pretty decent uptrend. This is a great example of why waiting for a minor low would make a lot of sense. However, earnings are right around the corner. So you're in that very truncated window of reaction in front of earnings. And so I would say probably post earnings would be best, but or shorten the time frame and look for 1 hour setups that could get you in and out in less than 3 days, and maybe do that before we get the earnings on the 4th of next month. But that, if you get a minor low out of this, that could be something worth watching. You can get a minor low out of that. I say that would definitely would be worth watching. What about Home Depot? Yeah, love it. It's a strong green name. Lowe's as well. Best two looking names in the uptrend on the ITB. Right, so ITB is generally trying to move higher. Lots of green grab candles. Not a great trend at the moment, but HD and LOW are by the dips. Just be aware that Home Depot is going into dividend. So that means that we'll probably get a little bit of a rally to that date and a bit of a pullback on and just after that date. So be careful of that rhythm there. As far as Lowe's goes, could Lowe's affect Home Depot? Yes, because earnings, for example, the way UPS can affect FedEx, right? Lowe's can affect Home Depot. Home Depot can affect Lowe's. Maybe use that as a bit of timing, right? As a bit of timing. All right, Crocs. Sure. Crocs is in an uptrend. Anything above the 200 is fair game. Two levels to look at. The automated support and resistance around 110.80, maybe 111, and then 105.35 on Crocs. All right. Next is CAR, C-A-R. So the question is it bottoming? No, nope, nope. It's in a downtrend. So no. No. CRW got hit on PAN. Oh, yes. Great point. Yes. I don't play either, to be quite frank. Thank you. I don't play either. There's PANW. This is why we don't play earnings, for crying out loud. Look at how gorgeous PANW stair-stepped in front of earnings, and then whammo. Why on earth deal with this when there's nice, sane, I sleep well at night type trades 4 to 6 weeks before? All right. So yes, thank you, Sam. What else do we have here? How long after earnings would I wait before safe, I don't know, right? Fifth, how long after earnings can I start to manage risk? At least one session. So let's use NVIDIA as an example. Since it came out after the bell, today is the day I don't touch it, unless I'm going to day trade it. Even that I really don't want to do. So at least 1 to 2 sessions, completed sessions after earnings. So had NVIDIA released before the bell, today would have been okay, right? But since it released after, I would say no. Yeah, I would say no. All right. So thank you, Fifth. I appreciate the question. All right, gang. So back into the Sector Secrets Mastery we go. We have a lot of 30-day trial members who are getting immersed in the world of Sector Foo. And it's been great. We're going to manage American Express on the open. Those of you that are in the Simpler Central room, I'll be with you in there at 10:30 this morning. Be good to each other. I'll talk with you soon.